everyone, Sage here and welcome to the Economic Corner, where we update you on all the biggest global economic announcements. So let's get started with today's show. First up on the Economic Corner is an update on the US Jobless Claims data and the GDP growth numbers. The Labor Department recently announced that initial unemployment claims in the US dipped to 411,000 last week, reflecting a sign of improvement in the job market. And while the current level of jobless claims is nearly double where it was before the coronavirus pandemic, they're exhibiting a continuous fall amidst the recovering economy. However, a dearth of willing workers as the labour market cannot be overlooked as employers continue to struggle in filling a record number of job openings. And two Federal Reserve officials recently stated that the United States economy is strongly recovering from the last year's decline. But much improvement is required in the labour market. And Federal Reserve Bank President Patrick Harker mentioned that while some workers are witnessing an increase in their incomes, there are still about 7.6 million fewer people working than prior to the pandemic, given the scenario. It will be interesting to see whether the labour market will be able to retain faster job growth in the coming months. And moving on now to the next news, upbeat reports from the Commerce Department confirmed a solid 6.4% GDP growth in the US economy in March of 2021. With vaccinations becoming more widespread and reopening of businesses gathering pace, speculations are rife that the US economy may observe the strongest year in about 7 decades. The improving health situation is expected to bolster consumers' demand for experiences and services they felt deprived of during the pandemic, stimulating economic growth. Investors are also closely keeping an eye on the United States inflation numbers for May 2021, due tonight. The inflation data may suggest overheating of the economy and spark fears of the early withdrawal of the accommodative monetary policy by the central bank. If inflation surprises the investors on the upside, as has been a trend in recent months, the market may see the US dollar gaining strength amid anticipations of sooner than expected surge in interest rates. And in addition to the upbeat economic data, the commodity market caught massive attention over a jump in Chinese coke futures to a 6-week high level on Thursday. And tracking China's coke futures, Australian miners jumped as much as 1.6% during the early morning trading session today, posting the 4th consecutive session of gains. Notably, the increase in the steel-making ingredient came as China tightened safety checks at coal mines ahead of the July 1st celebrations for the 100-year anniversary of the Chinese Communist Party. And besides, China's unofficial ban on Australian coal and resilient domestic steel production sparked fears of a tighter supply, contributing to the commodity's price increase. With China's Commerce Ministry remaining firm on stabilising commodity prices and promoting import diversification, it will be interesting to watch how the price scenario unfolds in the commodity space. And on that note, let's take a small break, but stay tuned with Kalkine TV as I'll be back in a moment with more of the latest news from the biggest nations in the world.
Tune in to stay updated while on the move.
We will tell you where the crypto craze has reached,
where the property market is headed next,
what the world is doing to become more environmentally friendly,
apart from tracking the daily market charter.
Be on top of the latest news and announcements
with Kalkine TV.
Hello, Sage here. Welcome back to the Economic Corner. Let's now take a look at more important news a little closer to home. The healthcare situation is turning grim amid the rising coronavirus cases in Sydney, and the health experts in the New South Wales government are torn between conflicting narratives, with one camp calling for lockdowns in Sydney due to the Bondi cluster and the other resisting lockdowns despite a surge in cases. And as the new variant has a reputation for causing large-scale hospitalisations, health experts are calling for stringent lockdown restrictions, at least for a few days, even with a very slow increase in numbers. While the New South Wales government claims that current restrictions are enough to combat the new cases in the nation, coming days will be crucial to control the spread of the virus clusters. And interestingly, a later study has shown that Australia's handling of the COVID-19 pandemic was more accountable than most of the other nations. A study conducted by the International Budget Partnership found that Australia was one of the only 4 countries whose processes in response to the pandemic were evaluated as having adequate accountability. The other 3 countries were Peru, the Philippines and Norway. And Australia's accountability practices appreciated in this study comprised delivering an economic and fiscal update and establishing an opposition-chaired Senate Select Committee to monitor the pandemic response. Moving on now to the next news on the similar lines. Market participants are also closely eyeing interest rate movements after the Commonwealth Bank and Westpac. Economists have projected that the central bank may have to lift the interest rate sooner than anticipated. However, the Reserve Bank of Australia has recently reiterated its stance of keeping the monetary policy accommodative to support a return to full employment level and reach inflation consistent with the target. A senior central bank official lately highlighted that achieving full employment and absorbing sparse labour market capacity are important national priorities at the moment. And while the labour market has successfully surpassed all expectations with jobless rate sliding to pre-pandemic levels of 5.1%, the central bank looks forward to 4% unemployment rate to generate wage and inflation pressures. In terms of interest rate decisions, Bank of England also grabbed significant attention after it kept the United Kingdom rates at a record low of 0.1%. And the central bank seems to have taken a sanguine stance on the recent surge in inflation while keeping interest rates constant. The UK is no different than some other developed countries in experiencing price pressures amid a rebound in the global economy. And as per the UK Central Bank, inflation is likely to rise above 3% for a temporary period in 2021 as the country's economic recovery continues at pace. And the central bank does not intend to tighten its monetary policy until there is any clear evidence that substantial progress is being made in eliminating sparse capacity and attaining 2% inflation target. Thanks for joining us on that report. That's all for now. Please keep watching Kalkine TV as Holly Shields will be back to bring you the last trade.